Hello everyone, welcome to my channel. Over the years, many clients told me they didn't know that they could claim medical expense tax credit. Medical expense tax credit is one of the most overlooked tax credits. In this video, I will explain the medical expense tax credit, how to claim medical expenses, and how to maximize this tax credit. If you would like to hear more tax savings ideas, please subscribe to my channel. The medical expense tax credit is a non-refundable tax credit that you can use to reduce the income taxes you have to pay. You can claim the medical expense you, your spouse, or common law partner paid for any of the following persons: yourself, your spouse or common law partner, and your children under 18 years old. These are reported on line 33099 of your tax return. In addition, you can also claim the eligible medical expenses you, your spouse, or common law partner paid for the persons who depended on you for support. This may include children who are 18 years of age or older, grandchildren, parents, grandparents, brothers, sisters, uncles, nephews, or nieces who were residents of Canada at any time in the year. These are reported on line 33199 of your tax return. You can claim eligible medical expenses paid in any 12-month period ending in the current tax year if these expenses have not been claimed by anyone else in the prior year. You should choose the 12-month period that allows you to maximize your tax credits. Here are some common examples for eligible medical expenses: prescription drugs and medications, eyeglasses and contact lenses, laser eye surgery, medical services by medical practitioners such as chiropractors and registered massage therapists, dental services, attendant care, and care in a facility. You can also claim premiums paid to a private health plan, as long as 90% or more of the premiums paid under the plan are for eligible medical expenses. To determine whether your expense is eligible for the medical expense tax credit, you can go to the CRA website and search in the list of eligible expenses. I've included the link to the search tool in the description. You can only claim the portion of the eligible expenses for which you have not been or will not be reimbursed. For example, if your private health plan covers a portion of your medical expenses, you can only claim the portion not reimbursed. In order to qualify for the medical expense tax credit, your eligible medical expenses must be greater than the lesser of $2,397 and 3% of your net income. Here's an example. If my net income was $50,000 and my medical expenses were $3,500, I could only claim $2,000 of medical expenses. My federal medical expense tax credit will be 15% of $2,000, which is $300. There are some tax planning opportunities in order to maximize the medical expense tax credit. You can combine the medical expenses for yourself, spouse, common law partner, and your children. If possible, plan the timing of your purchases, such as glasses, contact lenses, or dental services, to ensure your medical expenses for a 12-month period exceeds the lesser of $2,397 and 3% of net income. Generally, the lower income spouse should claim the medical expense tax credit. due to the 3% of net income rule. However, if the lower income spouse does not have enough tax payable to utilize the medical expense tax credit, then it would be better for the higher income spouse to claim this tax credit. There are other credits and deductions related to medical expenses, such as the refundable medical expense supplement and the disability support deduction. You can refer to the CRA website for details. If you like my videos, please subscribe to my channel. Thank you so much for watching.